Can we start? Bhanushree?
Yes, go ahead.
Yeah.
Sure.
Um, all right. Hello, everyone. Good afternoon. This session is an engaging and practical case-based session in our third skill lab of our series. It's focused on strengthening internal financial controls and preventing mismanagement in the social sector. This session will foster peer learning and unpack key strategies for building robust and compliant financial systems. Today, we have Mr. Sharad Bhargava, who's our speaker, and he's the managing partner at Saathi Development Services. We also have Bhanushree Goyal, who's the program lead team member at FMSF, who will be the session moderator. This skill lab is designed for our senior SPO leadership and finance teams to strengthen governance and transparency within their organizations. It's really good to have you all around. The session is being recorded. It will be uploaded on YouTube as well. At the same time, to all the attendees, for any comments and queries, please put your doubts on the chats. There's Q&A segment also. And welcome, everyone. Over to you, Bhanushree and Sharad sir.
Thank you. Thank you so much, Tenzin, for such a warm welcome. Hi, everyone. First of all, I think before we begin, I would like to congratulate the ISDM team for coming up with sessions like these. I think we are operating at a time where civil society is under enormous pressure, and sessions like these are where we talk about institution building or strengthening of systems. And I think it's no longer an optional getaway. It's actually the need of the hour. So I'm really glad that so many of us are gathered here today to talk about something which is extremely crucial and often overlooked, internal controls. Joining us today as a co-speaker for the session is Sharad ji, who brings a diverse set of experience. He's worked with organizations of various sizes and structures. And I'm sure that, together we'll have a lot of engaging and learning time today. And we'll make sure that today it's not just about, cracking technical concepts, but also we'll try to, enrich the conversation with a lot of practical examples, shared challenges, and real takeaways that you can bring back to your organization. So welcome, everyone. I'll be partly moderating and also speaking on some of the topics. Just before we begin, I would like to, broadly provide you the structure for today's webinar, how the entire structure looks like. So the learning today would be structured in broadly 4 segments. Firstly, we'll try to unpack how the current context of civil society organizations look like. We'll try to unpack, what is the larger context within which we are operating these days. And we'll also try to understand through that why robust systems matter more today. Why is it the need of the hour? Then understanding the concept, we'll then try to understand what internal controls are, especially at the operational level. We'll look at, some practical examples, both from, organizations of smaller or larger size. Then we'll take a short break and we'll zoom out to the governance and leadership lens. We'll try to see how boards and leadership play a critical role in ensuring that internal controls work. And finally, at the end of the last segment of the session would be where we'll give you some, practical and actionable tips that you can take back to your organization and implement those steps to, strengthen your systems. So that is how broadly the session flow would look like. Now, before, going ahead with the first segment, I'd like to, just very quickly reflect on what we've been seeing over the last few years. So when we talk about the context in which we operate today, it's not untrue to say that the context has shifted deeply over the past few years. I'm sure many of you would agree with me. We all know that the context has been rapidly evolving. And there has been, a constant shrinking of space that we've been witnessing. The laws are becoming more stricter. The demand for accountability is increasing manifolds. At the same time, it's not just, everything is dark. There are also ample of opportunities that are present, in terms of newer forms of association coming up, domestic funding rising, or rise in CSR funding, organizations being exposed to technology. So it's a mix of, the context. When we talk about context, it's a mix of situations, but largely, if we have to pinpoint it to, maybe 4 or 5 major shifts that have happened during the last 4 5 years, I think broadly we can, the underline of the context would be that the overall space is shrinking, and then the civil society organizations are facing a lot more pressure than before. Uh, so before, I hand it over to Sharad ji to talk about, to give us a picture about the large context, I would also like to, give you maybe 4 5 uh, paradigm shifts that I think have really emerged during the last 4 5 years. First and foremost, I think all of you will agree with me, and all of us have been, on the receiving end of it, that the regulatory environment is becoming significantly tighter. There are amendments in FCRA, there are amendments in Income Tax Act, sub-granting restrictions, so on and so forth. So many things, have come up. There are increased filing requirements, uh, so much so that, organizations, especially who are working at the grassroots level, smaller organizations, are really facing difficulties in complying with these difficult regulatory environment. For bigger organizations, we still, have the scope of support, but for smaller organizations, especially, it's becoming increasingly complex. Um, Secondly, I think the funding landscape is also shifting a bit. Globally, also, if we see that the priorities of the donors are shifting, really, because the global context is such that the priorities have to, shift to some other things. So we all know about how USAID funding impacted the civil society organizations, not only in India, but across the globe. And similarly, a lot of international donors and funders are kind of reshifting their priorities. So in that context, I think, that is also a major shift, which I think I witnessed during the last 4 5 years. Then, if on one hand there is, increase in domestic funding, and also, some domestic players are coming up, and there is also rise in CSR funding, but at the same time the requirements of those organizations are so strict. There is an entire due diligence process that these organizations would go through. The organizations would be asked to, submit various kinds of policies, and, have minimum level of systems. But the sector has been operating at a level which has not been so organized as such. So, the organizations are facing a lot of difficulty in terms of the operational environment that there is. Uh, I think at this moment, I would like to understand from you, Sharadji, that, from your perspective, what do you think has the operating environment for non-profits been, especially over the last 4 5 years? How do you see the current context in which the non-profits are operating?
Thank you, Bhanushree, and I thank ISDM for taking this initiative. This is a skills lab, and therefore the idea is to impart some kind of knowledge which uh, organizations can take back to their uh, uh, drawing board and plan and execute. So the idea is that this paradigm shift and the various areas in which the paradigm shift is happening, the areas themselves are diverse, and the shift is humongous in the sense that if Bhanushree is talking of FCRA, she's talking of CSR, she's talking of income tax, every particular area where the which concerns not for profits, that area has gone through a huge journey, and that churning. has happened in the last 4 5 years, which means that the time period that has been made available for not-for-profits has been so little. I mean, post 2020, things have kind of just rapidly changed. And that change, negotiating that change, given the way the sector was earlier structured and working, has been kind of a, I would say the word shock. Now, there are two ways of responding to this. One is that you think of this as a burden and shy away from it, or you think of it as an enablement kind of a situation, where enablement would mean that this is something that would have surely, in if not today, in the future would have come. Now, this situation is throwing up a lot of risks and opportunities for not-for-profits. Now, one needs to look at it in which way one looks at, whether you look at it as an opportunity because the change would have come since it had not come earlier. And therefore, we cannot shy away from this change. Embracing the change is important, negotiating the change is important. However, when this kind of a change happens, there are opportunities and there is a lot of risk. Okay. So risk is something that probably is more underlying for not-for-profits today. Okay, so uh, why I'm saying that is because I have never seen in my 25 years of not-for-profits this kind of uncertain situation, especially around statutory and regulatory landscape in this country. Not other areas also. I mean, whether it's an area of finance or banking or investment or kind of programming or technology, everywhere changes are happening. So organize, and that's something that I want to say, that these are changes for which the not-for-profit organizations cannot think that this is something which is not the right thing. It's actually the right thing. For if you look at the for-profits, they never complain about this kind of a rigor. They in fact like rigor. They in fact like discipline. They in fact like transparency. As Bhanushree said, they like accountability. Of course, the difference is that they have to are accountable to their shareholders who keep asking for profits. Our stakeholders have also started asking, and one of the stakeholders is government. Donors are another stakeholders where Bhanushree talk about donor due diligence. So all these changes are throwing up a lot of risks and a lot of opportunities for organizations. It's not that the organizations have just collapsed. In fact, when I talk to a lot of, especially the medium and larger organizations, probably they are more happy because they are saying, of course, the canvas for discipline and the canvas for compliance is more kind of straightforward. It has been made more kind of apparent. Today, maintaining books of accounts, maintaining other documents, how to maintain, where to maintain, for what period to maintain is all now defined. Now, if we were to, we can have a look at it at both in both senses, in the sense that it's probably, uh, it takes away the kind of freedom or the kind of, our own ways of working. That's what has been taken away. But it has brought about so much of discipline in terms of understanding what not-for-profits are required to maintain in terms of basic books of accounts and other records. You see, that's something that uh, that we can look at. Okay, so
Think there's some technical issue at Sharadji's end. Sharadji, are you here?
1 minute, 1 minute. Yeah, am I audible now?
Yes.
Yeah, so sorry. The point that I was making is that these risks, now you have to look at changes as risks or opportunities, and the bigger organizations are looking at these as opportunities. They are looking at it as rationalization. This sector has had a lot of period when there was no kind of discipline. So discipline is not something which is a burden. Discipline, rationalizing is something which is an opportunity. However, when we work in the current scenario, there are a lot of risks that we face. Risks of compliance. I mean, since there will be more compliance, the risk of compliance management itself becomes a risk. So, what I want to mention to here is that before we go further, is that these situations are bringing about a lot of, I would say, cleaning up in the sector, but also bringing about a lot of discipline, which will go a long way in giving the required structure and credibility to organizations, especially working in the social development space. So, what it means from our skills lab is in terms of how to bring our financial management house in order. I will make another small mention. The first week of this month, I was in a 3-day on-site training for about 15 odd CSOs, NGOs, and they said we were wondering why this 3 days training on financial management and financial control. I mean, we never thought finance, the paradigm of finance or the bandwidth of finance is that comprehensive. Now, after the training, we understand what involves finance. So, I think from here, what we can then, Bhanushree can kind of take it over and can go on to what needs to be done by organizations, more specifically small and medium, to bring their financial house in order given the kind of changes that are happening. Bhanushree?
Thank you, Sharadji. I think you've given us such an important perspective on how to approach the situation. So recently, we've been part of many conversations where we discuss about the context, and the undertone of the context is largely, that we are kind of complaining that, the environment is shrinking and the donors are, asking for more and more compliance requirements. But that's a very important perspective, that it is giving us a chance to kind of rebuild ourselves and bring ourselves in order. It's almost paradoxical when you think about it, that on one hand the space is constantly shrinking and the compliance requirements are increasing, uh, but at the other hand there is also a need for a bit more organization and kind of something to really have a minimum kind of standard of complying and having a minimum level of systems. So if we look at it from that level, from that point of view, it's really important that we take this as an opportunity to rebuild ourselves. And no matter how much we discuss on the context, and no matter whatever challenges we face, at the end of the day we have to get the systems in order, and we have to evolve with the changing times. So it's really important that we talk about how to strengthen our systems. So since we were talking about this macro picture, and also burden, on how the burden, or the onus is now a lot more on the finance department. So it also reminds me of the recent examples, some of the recent examples where some organizations lost their cancellations or registrations, not because of any malpractice or not because of any fraud or mismanagement, but simply because they missed, I think, filing some returns on time, or or for reasons as simple as that, the opening or closing balances are not matching. So it's not just about, waiting for any big thing to happen. The organizations need to constantly have their systems in order. And that is what we are going to talk about. It's not just about, stories of bad intent or corruption. It's stories about weak systems, missteps, poor handovers, preventable gaps that we could have easily avoided. So that's going to be, our focus for today, that, why internal controls. We'll talk more about the concept further, but how internal controls, they matter not just in theory, but also how they work, as everyday safeguards, everyday checks and balances that we can incorporate in our systems and processes, so that the organizations can, sustain those fluctuations that keep on happening. So from this point of view, Sharadji, this is the context that we operate in, and we've established that, that there is a need for strong and robust systems and process within the organizations. Now, where does internal control fit into this picture? We're talking about strong systems, but where exactly does internal control, fit in the picture?
Bhanushree, the point is let participants first understand, the basics as basics. Let's understand what financial management is for a not-for-profit. It's not just not-for-profits, it's for every organization, for-profit or not-for-profit. And financial management, basically, in terms of a definition, would include planning, organizing, monitoring and controlling financial resources. So we are talking all financial resources. Now, the financial resources is not just the cash and bank that we hold. Anything which has value is something which is the financial resources and assets of the organization. Now, if we look at the entire spectrum of financial management, that spectrum from planning to controlling will necessitate first setting up the financial system. Now, the financial systems and controls are two related topics because the financial systems will work if there are internal controls. Now, so first let's look at financial systems. So various parts of our organization's financial management, and that's very critical for organizations to understand. And I want to also tell you that before this question comes up in terms of what is the kind of resource intensity that setting up systems, controls, and validation will take, my answer is virtually nothing. It's a question of the mindset. It's a question of our adjusting our thought process to these changes without looking at any additional financial resources. It's the same HR resource in finance, but with better education, better awareness, better empowerment that can deliver the same thing that needs to be done to face up to this kind of a challenge or change that is happening. Now, the change will not change. The change is for a good year, and I think that will do a lot of good as time passes. Now, coming to what financial systems, so you will have financial systems in terms of your accounting, your procurement, your various other assets. You will have it for your bank. So various aspects related to how to manage finance, which means planning finance, organizing finance, and monitoring finance. Now, what is planning finance? Planning finance is getting finances for the organization. And organizing finance is allocating those resources, and monitoring is actually monitoring whether the way the financial resources were planned in terms of what the monies came for and how they were allocated and utilized is actually in line. That's monitoring. And controlling is where the internal controls come in. Okay, so effectively at the planning stage in financial management, the controls will come at the planning stage, because for all the systems, what is internal control for any system like a procurement system? What are the controls in procurement system? Are the rules and regulations or the procedures? Procurement is a system in an organization, okay? And that will be regulated by certain rules and regulations. And those rules and regulations, practices, procedures, protocols, whatever you might call them, standard operating procedures, whatever you might call it, are basically the internal controls. Now, why do we need internal control? Why do we need financial systems unlike human beings? Because organizations do not have their own kind of, although it has its identity, but it doesn't have its own kind of head and eyes and brain. Therefore, they need this, and all people need to understand the system uniformly for clarity purposes for doing their job. So, when the financial systems are set up, you will also ensure that the rules and regulations for implementing or for carrying out the various works in that system is also in place. Now, therefore, you will have internal controls. So look at procurement, for instance. Procurement is a major component of the financial system of a not-for-profit organization. Now, for procurement to happen, the methods of procurement, the procurement process, whatever, and say for accounting or for any other function. I mean, it doesn't matter. It's an accounting system or it's a procurement system or other assets. They or even program. They will need to follow certain rules because that rule has to be understood by people in the organization. Now, the rules and regulations is nothing but internal control. Those are rules of internal management of an organization for that particular area. Now, do we need to cover internal controls for the entire organization? Ideally, yes. If we are not able to cover it, can we cover it in the next 5 years? More likely, that should be the approach. So, if we were to look at internal controls are nothing but rules, procedures, protocols, guidelines for doing work that needs to be done in that system. That's about it. Now, if we were to look at internal controls, those are what, why do we need internal controls? Because that is the framework. Again, that's the framework within which the people in the organization have to work in that particular system. Okay, so various components of the system, compliance can also be a part of the financial system, and therefore you might have compliance controls. Now, why that framework in terms of internal controls is primarily to ensure that we do not get into the boundary of risk. Okay, so risk is always encompassing us. Let me tell you, when I talk to for-profit organizations, risk management and identifying and understanding risk is something that is the first thing that is taught in financial management to a person in a for-profit. I don't think we talk about risk management in not-for-profits, but that's becoming an increasingly important area of internal controls for organizations, because the donors are very, very uncomfortable if there is an element of risk, because that can jeopardize their donor funding. They are becoming increasingly fussy about it. So, while not getting out of the subject, what I'm saying is that all financial system robustness is linked to implementation of the rules and regulations, which are nothing but internal controls. And the financial system setup is one, the rules and regulations following the financial system for that particular financial system, if they are followed, accountability ensured, transparency ensured, checks and balances ensured, each one kind of ethical practices ensured. If all that is done, that particular part of the component of the financial system will become robust. So that is so, it is so simple like that. It's again, as I say, an issue of culture, an issue of thought process. It does not require any major change in the way the organization is or the organizational finances are. It's a way of life that has to change for organizations, because we are talking of nothing but kind of bringing the framework and discipline to our systems, and that's what is internal controls. Now, broadly, internal controls will be kind of three. Okay, so you will have operational controls, which is your programming. And when it comes to finance, there are two broad controls that we look at. One is financial controls, which is everything to do with the finance bit of our organization. And the compliance controls, which is very important now. In fact, compliance controls are becoming even more important, and that is why we are so afraid. The compliance controls are becoming important primarily because the compliance framework has become more tight. It's not tight, it is more rationalized, it's more systematic. So bigger organizations, when I talk to them, you talk to the pradhans and regions of of the livelihood sector, they say we are happy that this kind of clarity is coming, because this kind of clarity ensures that we are not, there is no ambiguity in terms of how to interpret it. Also remember that everything today in terms of compliances is online and everything is faceless. So as long as your organization finance team, your auditors are not fully aware of the changes, and the changes, as Bhanushree said, are so sweeping that you will somehow or the other commit mistakes, because as Bhanushree said, probably some of the organizations lost their certificates of registration, and especially certificates of registration, which is 12AB, merely by selecting the wrong section code. Why? Because the finance team didn't know, the chief functionary didn't know, and the statutory auditor didn't know. And when it came to assessment, the organization didn't have the login credentials. Okay, they didn't have the login credentials, they didn't respond to them. Suo moto, ex parte, the decision was made by the income tax department that your certificate is cancelled. Now you have a 3 crore organization which does not have a 12AB. What fate do you have? Is not related to any expenditure of money on this. It's a way of disciplining oneself. So I will come to financial controls, but I want to underscore that internal control is nothing But our framework, our rules, our regulations, which we have not copied and pasted in our books from somewhere to show to the donors, but which we are actually practicing. Also, I want to say that when I go to organizations for due diligence on behalf of donors, I find these so-called policies. These are nothing but tools of internal control, of financial control. But when I go to them, these books are all filed somewhere, but when you see the implementation, that has nothing to do with these financial policies. So if organizations think that financial controls have to be just copy pasted and put in file and not implemented, I think you are doing greater damage to the organization. So what I'm saying is, internal controls is something that will give robustness to your financial systems if implemented by your heart and your mind, and not just you, every person, right up to the last person in your organization working on the ground. You have to create that culture. I want to, before giving it back to Bhanushree, I just want to have one more point to make to you. I was talking to an organization called Pradhan, whose turnover 20 years back was 20 crores. It's about 300 crores today. Okay. I said, well, how have you become so big? What are one thing that you did not compromise on? Did you compromise on donors? Did you compromise on this and that and people coming and going? They said we compromised on anything. We didn't compromise on one thing. And the one thing that we didn't compromise was on our controls, on ensuring that whatever was required to ensure that controls are actually implemented in letter and spirit, not in letter, but also in action, is something that we did not compromise. And donors, year after year, they recognize that this is one organization where, as far as controls systems are concerned, we don't have to bother. Therefore, they brought the money, and this is what has happened. So I cannot overemphasize the importance of controls. But what I'm saying is that all financial systems in your organization, and they will be different in terms of size, in terms of coverage, but all these financial systems will need to have rules and regulations, which probably is nothing but internal controls. Now, internal controls, as I said, could have financial and operational and compliance, just because we want separate different parts of this financial system to be controlled through in different manner. And therefore, I've talked about these three areas of internal controls. We can talk about the financial control bit more and the compliance control bit more, because we need to understand what that means. But over to you, Bhanu, for 10.
Thank you, Sharad ji. I think that was a very good simplification of what internal controls actually are. All of this sounds like, there are some special systems and practices or something that we need to learn and understand, but we might not realize that the organizations are in any way, implementing some sorts of internal controls on their own without even realizing it. And it's also important to draw that distinction that you drew initially between, the broad concept of financial management and then internal controls. So financial management definitely is a broader concept, and controls are nothing but, as Sharad ji said, that they're kind of a preventive mechanism. Why is a non-profit organization existing? Why does a non-profit exist? Because they want to achieve a certain sort of development impact, and to go there with the funds that they receive from others. It's not our own funds that we are operating on, it's the funds from various other third parties. And that is why the demand of accountability and transparency is so much more than as compared to for profit organizations, where all the decisions are made only for the benefit of the shareholders. But over here the benefit travels a lot more than the organization's own boundary. In fact, the benefit should not remain within the organization's boundary, so the whole context shifts. So in that sense, I think it is a very important thing to understand that internal controls are not just controls. When we talk about the word control, it has sometimes a negative undertone, that something that we are controlling or curbing. But I would like to highlight here that internal controls are not necessarily about, controlling how you behave. Control in the sense that it's just rules, processes, procedures that direct us towards our own mission without any misuse or without any other unintended use. So if I can just add here and underline that, please remember that there are internal controls, are checks and balances that are preventive in nature, that are primarily preventive in nature. It's like, having systems in place so that you don't falter, so that you stay on track, and so that you move rightly towards your development mission. And also, I think a very important concept here, since we have already unpacked what internal controls are, I think internal controls are essentially about segregation of duties. If I have to put it in simple terms, checks and balances in the form of segregation of duties. To simplify it, no one person is supposed to, take a process, do the process from start to end. Like if I have to take an everyday example, let's take a look at how we go at the airport. You just don't walk straight into the plane. You go through multiple layers. One person checks your ticket, one person, verifies your ID, the other person scans your luggage. There is somebody else who checks you at the security guard. So there are different, control points established. It's not that, it's not caused to delay the process. It's not caused to delay anything, but it's just, control points, and those exist so that no one single person or process is solely responsible, from a process from start to end. And that is what essentially internal controls are in an organizational setup. There is also this important, very commonly used concept of 4 eye principle. 4 eye principle meaning 4 eyes. Every process should go through 4 eyes. I mean, at least two people. So at least two people, if they are overseeing a process, or if they are, involved in a process, that ensures that checks and balances are there. Sharad sir was taking the example of procurement processes. So no, the person who's, making the purchase request is not the one who's supposed to select the vendor, and is not the one who's supposed to make the payments. Had that been the case, then, the controls would lapse. There would be chances of lapses in the whole process. We'll deal more about it in detail when we talk about, the financial systems and processes. Uh, but if I have to, Sharadji, we broadly talked about it, but what are the top three non-negotiable internal financial controls that every non-profit must implement? Now that we've talked broadly about the context and we've also broken it down, but what are the, top three non-negotiables if we have to just
So,
discuss?
uh, Bhanushree, I would like to also, clarify this point that uh, internal controls, as Bhanushree has talked about, segregation of duties. That's one very important pillar in terms of internal controls. But the process itself, the procedure itself, is brings about internal controls, and we don't realize it. The only thing is we have to follow it. Okay, so that is something which is very, very important. So implementation of the so-called internal controls that we have put in place. Now, where again the word control has a negative connotation, and I would not call it control, I would call it a framework. Why? Because all people in the organization should understand the framework uniformly for purposes of decision making. So that facilitation or that framework or that prevention of risk or loss to the organization is what this word IC is. And you may have this IC in different parts of your organizations or parts of your financial system, which broadly I've then said is financial controls and compliance controls. Now, in terms of internal controls, okay, the top key things that Anushri is asking me to specify. The first is when you want to implement financial controls or even compliance controls, you must have policies and procedures for those specific systems in your in financial systems that you have. So the first important thing is to have policies and procedures, because that policy and procedure is nothing but an internal control tool. So again, I want to say it at the cost of repetition. We don't need to have policies and procedures for the sake of showing to the donors, but we have to have policies and procedures for our internal management. And that internal, once the procedures have been embedded in our internal management, then they will start speaking in our action, in our records, in our documentation. That's where we have to move. Now, this is a big barrier in not-for-profit organizations, which I have seen, because unless you realize the importance of internal controls and actual following and implementation of internal controls. So the first thing in internal controls is, as I said, internal controls are procedures. So the first thing that the top thing that to me is important is to have proper policies and procedures in various areas of financial management in your organization. Now, does the policy and procedure document have to be a 100-page document? No. It will all depend on the size of your organization. So if you're a small organization, even a 5-pager or a 20-pager or a 15-pager based on the organization's need, number one, the stage of evolution at this stage, number two, and where this organization would like to be in the next 3 years, is what the coverage of your policies and procedures are is has to be ensured. You just cannot copy paste policies and procedures from here. Now I get a lot of questions on here and there saying, can we get a sample of the finance manual? Now I can understand why, because the idea is not to make the finance manual tailor made to the current need. First identify those needs, tailor to your current needs. Second, to see that they are valid for the next 2 3 years. And third is to see whether what stage are you, how much of emphasis is required in different systems in your policies and procedures. So the first thing that is most important to me is to have a realistic, tailor-made policy and procedure document covering the specific areas at that particular point of time and for the next 2 3 years, in form of a document which needs to be practiced. That's the first thing. Now, practicing is the most important thing. Okay, not having the document. The second one, to me today, in terms of controls, is compliance control. Now, why I say that is because the non-compliance is becoming the biggest existential risk to an organization. What is an existential risk? Whether your organization exists as a charitable institution or does not exist as a charitable institution is now no longer dependent on how well you have done your programming, how well you have responded to the donor, but how well you have responded to reporting and registration requirements. What is compliance? Compliance is partly into two parts. So one is your primary registration, which this act or the statute requires you to do. So that gives you that privilege, or that door opens up for that benefit to go to you. But the benefit to continue is the second part, which is your reporting compliances. Now, the reporting compliances are also increasingly becoming complex. For instance, if you were to look at, earlier you had nothing like a 10BD, you used to make those slips and give it to anybody, and all kinds of things used to happen. Now that's become more disciplined. Unless you file your 10BD, you file your 10BE, generate the 10BE, you give it to the donor will not get the benefit. Similarly, when it comes to audit reports, in terms of the current versions of audit reports, they are much more complex. They require much more information. They have to be more accurate. Now, is accuracy, more information, wrong? I say it is good, because it is making you come up to that level where you are able to give information. Does any for-profit crib about giving information, reporting compliances? No. So we will also have to learn that these controls, that the second one that I'm talking of, not only in terms of your registration, but also in terms of reporting compliances, we have the right kind of people. And the right kind of people are not people outside of organization. They are already sitting in your organization. You have to make them aware, give them knowledge, and make them empowered. so that on their desk they can take action. A lot of resources are available in the marketplace today, and it's only a question of your prompting. And again, I bring that question of culture. uh, how, as the leader of that organization, are you mentoring that person? First you'll have to mentor yourself. So the second one to me is compliance management. Okay, that to me appears to be the biggest control point today and for the next couple of years, unless we have been able to match up and move up the learning curve to be able to negotiate those compliance challenges. Those compliance challenges will never go. So annually you have reporting compliances, and you will have to report, continuously report now, and more reporting will happen. Okay, and if the reporting is not correct, the action is also equally catastrophic meaning that it can have make or break kind of a situation. The third point that I would want to bring in is uh, you know a, a point that is becoming very important for donors, and that's what is called as risk management. Now I want to introduce this concept again. Does risk management require finances? The answer is no. But can organizations look at their organizational or enterprise risk profile, and what are the areas that can cause that of risk that can cause harm to that organization? Okay, maybe in the financial area, maybe in compliance area, maybe in operational areas, and take action. So third important thing, and I don't want to get into the risk management process, which is again an annual process, an iterative, and actions have to be taken, doesn't require financial resources, requires a certain way of thinking and action. Okay, so to me, the third pillar, the third important part in terms of controls or in terms of meeting up these challenges is to understand the risks that our organizations are facing, prioritizing that risk and addressing that risk with the existing resources without having to look at additional resources. Now, this means that for all these three areas, a lot of awareness, education, empowerment, and action needs to be taken by these organizations. And especially this will come from the top management. But can we shy away? Can we ignore it for long? I don't think, because as I said, the existential risk for organizations which are not compliant is so huge now, and therefore they are scared. So the answer is either to be scared and not look that side, okay, or to be bold and face up to that challenge. So my answer would be we have to be bold and face up to these challenges, and therefore put in place at least two, three. And I don't mean to say that all controls will be put in place overnight. The risk management policy or a risk management process will help you to understand which are in your organization, which are the areas in which internal controls need to be the first priority. Prioritize them, do them. Once you have reached to a stage, then look at other areas in financial systems and processes which can be made part of your kind of risk management strategy. So these are three areas currently that I think are, but we'll have to be open about it in the sense that we don't have to do, and this is something that I would want to put up very upfront, and I may not be criticized for this. We don't have to do things for the sake of lip service. Those days are gone. We will not be able to manage our organizations or create or ensure existence of our organization if we do not act today. By shortcuts, by dodging, by not taking action, I don't think our organizations will survive. So that's sorry about that, but I mean to say that primarily to emphasize the need for controls, the need for discipline, the need for framework, uh, in the current very turbulent time that we are into, and maybe for the next couple of years till things stabilize. But at the same time, as Bhanushree said, all is not lost. The bigger medium organizations are becoming bigger and bigger. Why? Because their compliances were good and they have strengthened compliances. So I would urge the small medium organizations to look at this very seriously. No financial resources required is what I will still again and again insist. Back to you.
Thank you, Sharad ji. I think that was a really insightful perspective that you gave, especially around how internal controls should become a part of the culture and not necessarily something that we look at as, additional burden. This needs to be incorporated in the, blood and sweat of the organization, in the spirit of the organization. And controls, like we already discussed, are not controls in its literal meaning. It's basically to empower you, to keep you disciplined, to keep you on track, to keep you focused, without having to worry about systems and processes. So even if we like you gave us three important non-negotiable internal controls, the first of them being financial policies and procedures. So it's true that we, go to organizations and we see that they have a bundle of policies, this big bundle, neatly packed, clearly organized, with lot of clauses, very big set of requirements, rules and requirements. But are those actually being implemented? Are those actually in practice? That is a bit, there is a big question mark over there, and we see the impact of those when any kind of assessments happen within those organizations. So it's very important to keep the policy as simple as possible for your organization. No need to have big policies with lengthy clauses, something which is not even relevant for your organization type. So identify what kind of processes are required for your organization. Is this policy even relevant for your organization? Are those procedures really required in your organization? And since we're talking about policies and procedures, I would also like to, point it out, especially from the lens of smaller organizations, the organizations who do not have a lot of manpower to, handle the processes. Uh, the policies and procedures do not need to be fancy. Something, as basic as who approves what documents you need, what documents are needed before a payment is being made, or how do you, maintain your fixed assets. Just having this documented can bring so much clarity. And then if you again remember the underlying principle of segregation of duties, it becomes very easy. Who's going to handle what? At least, two, three layers. Who's going to approve expenditures up to a certain limit? Procedures as simple as that. No need to, include clauses which are not relevant for your organization. So it could be even a 2 to 4 pager document which simply lists down what are the processes and how the organization is going to, go about those processes. Uh, is something that an organization can look into. Of course, there are various templates and various guiding documents available across the sector. There are some good resource materials that are available. But then, of course, what is relevant for you is something that the organization's leadership should determine, that this is what is relevant for us and this is what, we need to streamline. No need to go beyond a certain length. Also regarding compliance management, we there is this underlying emotion behind compliances that it is burdening. It is burdening day by day. But compliance as such is, such an important tool that can help you keep on track. And of course, the complexity behind compliances is increasing. It's, increasing a lot more. But why the complexities are increasing are also because they are not prepared for those shifts. The organizations are not prepared to handle those sudden shifts. And why they're not prepared? Because they have not spent enough time to, streamline their processes, to really sit down and discipline themselves in terms of how the organization is supposed to move ahead. And that is why, these sudden changes, all of this feels so burdening at time. So of course, it's a journey that you have to gradually take and take step by step. Steps to ensure that compliances are there. Uh, And also risk management, we do not want to, focus so much on risk management as a concept, because risk management again encompasses a lot of things. But something for smaller organizations, like, being proactive in trying to identify what is working for them and what is not working for them. Simple tools like, you sit every quarter amongst your team and try to identify what went well, what went wrong, what could have, been done in a better manner. Practices as simple as that also denote risk management in that sense. So we are clear about, the broad three operational lenses that internal control plays out, and Sharad ji has explained really, elaboratively on these three aspects. But I'm also going to touch in between some of the questions that the participants had posed before, prior to registering for this webinar. So I'm also going to bring in those aspects in between. So since we were talking about risk management, Sharad ji, and we were also talking about the various other policies and processes, there's an important aspect of internal audit that comes up when we talk about these aspects, when we talk about internal controls. So how does that fit into the picture of internal controls?
Thanks, Bhanushree. Before going to that question, I want to also say that we what we try to do, and this skill lab should help the small medium organizations demys- demystify some of their myths and misconceptions. So we want those myths and misconceptions to be diluted or to go away after the lab. Okay, and the action should follow, because sometimes we deliberately create a barrier in front of us, thinking that, well, how do we do it so much this, and people here and there will also keep telling. So what we did is we developed a compliance calendar today, yes, I mean, sometime back, in terms of understanding what are the compliances that a small, medium organization is supposed to do over a period of 12 months. That's available on our, resource library called PATIC. Uh, and what we realized is that if many organizations don't have TAN, do not deduct TDS, even if they are in the this thing, not more than 2 days in a month are the compliances. If you are a normal small medium organization doing TDS and doing any other reporting, we are not talking of GST, we are not talking of other things. And every couple of months, you will have the idea of the 10BB or the 10BD or the 10B or the Form 9A and the 10 or whatever. But that's not monthly. In a month, not more than 2 days is what the compliance calendar showed up as the days for compliance. So sometimes we create this facade in front of us and say, well, how do we do it? I think a lot of it has to be demystified. That's one thing that I want to say. Now, coming to the question of, so let's understand that the internal controls are for ourselves internally. Okay, internally. Okay, this is what I call it, the rules for internal management. I don't have to go out and tell anybody. Of course, whether if I'm not following the internal rules and not following internal controls, external people like the statutory auditor is going to come back and comment on that and qualify that. That in fact will be again more dangerous, because nobody will like to deal with us. But that's something that is the external auditors. But the internal controls are for internal management. This is what we have to understand. Internal management, as of today and for the next couple of years, what is the right controls? You have to decide. Now, when we talk of internal controls, those are kind of boundaries, those are kind of framework in various areas of our financial system. So when we talk of the financial management definition, we had this last component, which is controlling, and that is where the control piece is coming. Now, control is not control in the negative sense. Control is in terms of ensuring that we are working positively and everything is in order. That's how you have to look at it. The other side. Now, who decides whether internal controls are being practiced in the way they are written? So you have the written documents, which is called as the policies and procedure, and you have the actual implementation of programs and activities that are concerning your organization on ground. That is the physical implementation. Now, the physical implementation or actual implementation has to be married to what is written on paper. Now, whether it's happening or not is something that internal audit can do. Now, is internal audit mandatory? The answer is no. Is internal audit to be done religiously for our organizations? No. Again, as I said, internal controls and policies and procedures. What is the stage of evolution of your organization? And that you understand. Each promoter, each chief functionary will understand at what stage it is. Therefore, please don't think that you have to just do something for the sake of doing. Now, based on where you are standing today in terms of your size, your geography, your complexity, how complex your internal controls have become or are today versus maybe 5 years back, you might need some professional who should be able to tell you whether what you are practicing and what was put on paper, is it aligning or not aligning? Number one. Second is not only this, but also as your organization is growing, somebody as a professional who understands you, because he is an internal person. Internal. The auditor is internal. Again, he's not talking to the outside world. He's talking to you, the internal management, you people. Now, this auditor is the person who is a professional because he understands various aspects related to finance. That is why he is an auditor. Okay. Otherwise, I could have been an auditor for you, or you yourself could have been an auditor. But here I would also say that it is not mandatory that internal auditor should again be a professional auditor. Even in very big organizations, I find finance teams, because they are very big, therefore they are becoming internal auditors. What it does, it helps educating the teams also and ensuring consistency. But forget that for the time being. Internal audit is validation of implementation and correct implementation of internal control. That is what internal auditor does, number one. The second thing is that the internal auditor also is facilitating and helping you to decide whether the current level of controls are good enough, or do we need to improve on those controls by bringing in more control. Third thing that it does is, before any control deficiency comes to the external auditor who might point it out, and therefore it might have damage for your organization's reputation, he ensures that if there is any internal control gap, deficit that is there, that can be plugged by putting in place the internal controls, will then ensure that we do not get into the area of risk. So these are three, four things that an internal, and it also, the internal auditor is forward looking. Internal audit is always forward looking. They say, well, you have done up till now move to the next level. So internal auditors are people who are your facilitators within the organization to take you to the next level from where you are, because they understand finance, financial systems, controls better, and more so because they are working with you now. Right now they are not working externally, they are working with you, so they have over a period of time understood. Now, when to introduce internal audits? Yes, internal audits should be considered for validation of internal controls and for putting in place higher level of internal controls, so that we are able to become ready for facing more risks as they come. That is what it is. Now, why I don't want to talk of internal audit uniformly with all organizations is because all organizations are at different levels. When I worked with organizations, if I work with an organization which is now 50 crores, but when I worked with that organization which was just about 1.5 crores, and the board comes back to me and says, should we have internal controls? I said that the current level of operations, geography, and complexity does not require internal audit. What it requires is putting in place internal controls for the next 5 years first. But when we go to that threshold and that level, is when we should consider internal audit, because then probably complexities would have gone up, size would have gone up, geographies would have gone up, donors would have gone up, and probably some donors might insist on an internal audit. Now, my experience of internal audit, because I do due diligence of so many organizations, for grant making organizations, for grantors, if I were to do 100 due diligences, the internal audit report for would be somewhere between 7 to 10%, which means 7 to 10 organizations out of 100 would have internal audit. So again, since I deal with small organizations, therefore the current institutionalizing of internal audit is still not there. And I do not want to say that internal audit should be made part of, a formal internal audit process should be made part of every organization, unless that organization has crossed a certain threshold on various parameters, which again the management will have to decide. But smaller organizations can have people who are not people who are just implementing, but some other people. And again, I want to say that smaller organizations always talk about segregation. We don't have people. Where is the segregation going to happen? I am again telling you that when I go to small organizations, segregation of duties is not happening, because people are doing some work which need not be done. You have a finance person who's only doing banking. Okay, when I told them you don't need to go to the bank, you don't need a person for bank operations. Why don't you put that person on verification, or somebody initiating the transaction, somebody verifying, and you are approving? That bank person is just doing all routine bank transactions manually, which could be converted into online. When I talk online, the promoters start saying online mein fraud hoga, as though of manual mein fraud nahi hoga. So you see, but again, technology is growing, and unless organizations pick up the technology thread, competitive risk जो है organizations को will ensure that your existence, even if you are compliant, will is in danger, because the technology is making things so cheap, and other organizations who are embracing are becoming so competitive that the donors will look at them. So passingly, I want to say that what I am saying is that internal audit need not be always formalized or done from an external person or an external professional. You have to decide. What internal audit does is validation. Now, what is the validation? Even validation can be done, because this internal audit report is not shared with government. This is shared only for governance purpose. Who needs the internal audit? And we'll come to the governance piece in a bit more after some time, to understand what controls, who's responsible for controls. Is it the management or is it the governance? And that's the debate that we will have. But what I'm actually trying to say is that internal audit should be looked at as a way of validation, but whether it should be formally included as part of your institution is something that will depend on the vary from organization to organization. But yes, internal audit is a good practice that should be considered at appropriate point of time. Bhanushree?
Thank you, Sharad ji. And that's a very important and true perspective regarding internal audits. We've been, hearing this term of internal audits, and we've also received a lot of questions surrounding that. But it is also true at the time that internal audits may not be every organization's cup of tea. While internal audits, like Sharadji explained, is a very, very important tool for validation of your internal controls. But at the same time, not every organization has the bandwidth or resources or scale or capacity to commission formal internal audits for that matter. And that's perfectly okay. What is important is to have some sort of validation mechanism, some sort of, preventive mechanism in terms of how well your controls are placed within your organization. You see, there's a difference between the nature of audit in when we talk about internal audit or a statutory audit. Internal audit, like we discussed, is mostly for the internal governance of the organizations. So to say, it's mostly preventive in nature. It helps you in preventing what could go wrong. Statutory audit, on the other hand, is more like a detective control tool, which kind of detects when things have already happened. The nature of the two audits is very different. But even without a formal internal auditor, even without that, you could have various mechanisms in place so that you could kind of validate how well your controls are placed within the organization. So to give you a few tips, for example, once a quarter, someone from the admin team could go through your finance records just to check if all the vouchers are signed, approvals are documented, or if anything looks off, or something is not falling into place. It's a very small mechanism, but it builds a culture of accountability. It builds a culture of answerability. The finance team would know that once in every quarter there's going to be an internal check. Somebody from the other department might come and verify or check their documents. Somebody from programs can randomly verify if the reported expenses are matching the activity reports. So it's not formal internal audit, but it introduces an additional layer of verification, and that is what is important. You have to build this culture of review and self checking constantly to test the waters within your own organization. Similarly, another example could be that you could set aside one day every month where the finance team, along with the director or a program coordinator, whatever the structure of your organization is, can review some basic things, that how well our policies are there, have the procurement processes been followed, are the bank reconciliations being done on time, are all the registers, the subsidiary registers, asset register, or everything is maintained, is falling in place, are the attendance records fine or not. So it's just building a culture of internal review and checking so that the organization knows that where the gaps lie. And to enhance this, you could obviously reach out to some experts from your board, maybe, or from the statutory auditor. You could ask many other people, but it's not important to have internal audit as a compulsory mechanism in your organization in case your resources don't allow. uh, so these small checks and balances, if placed adequately, kind of builds this culture of internal verification and preventing what could go wrong. So there are a lot of other approaches as well, some approaches like, just as simple as this variance analysis. So if you do this variance analysis on a monthly basis, and also kind of review that what went wrong, sitting together, the finance and program team, that process itself can, highlight so many things that maybe you need to take care of. um, so these are, I think, some ways how internal controls can be, placed in the operational lens. Like Sharad ji said, we'll move on to our next segment, or the third segment, which talks about whose responsibility is it. But I think before that, we should maybe break for a quick 5 minutes. We've been connected for so long, so let's break for a quick 5 minutes, and then we resume at 3:20 to talk about the third segment of this webinar. Works for you, Sharad ji?
Yeah, it's all right. I just want to add one more point. You
Yes.
see, internal audit I've seen in many organizations. I've been part of organizations where there was a formal internal audit process. In fact, there was an full internal audit team in many of these organizations. I want to also say that again, just like internal controls, हमने बना लिए, internal control का document हमने बना लिया. Sometimes the internal audit also becomes like that it is just part of the checking the box, okay, ticking the box, and not very seriously taken very seriously, because the statutory auditor as an external auditor has to be taken seriously because it is a make or break situation. But the internal auditor is more like a friend, okay, is an auditor friend to us. And when it's an auditor friend, the friend actually at times might just say something, but you just don't give a ear to that. So what I'm saying is, if you have internal audit as a formal procedure, that internal audit procedure has to be taken seriously, and the outcome of the audit report has also to be taken seriously is something that I have been seeing is also missing. So at times it vitiates the very purpose of internal audit. But then what I'm saying is, this, call it internal audit, call it any audit. It's an audit of the efficacy, the implementation, the veracity, the truthfulness of the internal controls is what we are trying to check. Call it whatever, whether you call it internal audit, whether you call it internal checks, anything, only to say that yes, all is good before some external person says no, it's not good. So with that, let's break for 10 minutes and we'll come back for the third segment.
Thank you, Sharadji. All right. So we are back with our third segment. So far, we've discussed the broad context in which the civil society organizations are operating these days. And we saw that there are various challenges, but at the same time, there are various opportunities. And the underlying sentiment right now is that we need to, discipline ourselves better. We need to organize ourselves better in order to survive the changing times. We saw that how internal controls are, what internal controls actually are. We understood how they could be placed in organizations across varied size. So from smaller organizations to bigger organizations, from simple checks and balances to processes like risk management, internal audits, we saw the various processes through which, internal controls could be placed. But at this point, I am really curious to understand from all of you. I would like you to take a quick second and answer my question in the chat box. So I would like to ask all our participants that whose responsibility do you think internal control is? Is it the responsibility of the operational team, the staff, or the management, or the board of the organization? Because we also touched it from the angle of governance. So, whose responsibility do you think it really is? And then Sharadji will help us unpack the concept. So, very quickly over chat, if everyone can answer, whose responsibility do you think internal controls is? Okay. So, we see that some of you think it is the responsibility of the CEO. Some of you say that it is the responsibility of governing board, management, operational staff. Any other answers? Any other answers quickly? CFO. So someone says that it's the responsibility of CFO. Okay. So, okay, all of them. All right. So a very good answer towards the end, all of them. I would like to say that, it's not the responsibility of just one particular person or one particular department. Internal controls, the honest answer is that it is a shared responsibility. It is not something that stops at one point. It is a responsibility that everyone has to hold together. Everyone has a different role to play when we talk about the responsibility, but everyone, be it the board or management or the staff, has a role to play in ensuring internal controls. How is it? Let's understand it, like this. So, there are two lenses from where the organization can be looked. One from the governance lens and one from the operational lens. The governance lens largely, kind of keeps an oversight on how the organization is moving, how the organization is moving towards its development mission, whether the organization is doing everything that is required to move towards its mission, and whether the organization is, ensuring that it sustains itself in the process, because ultimately what the governance lens is concerned about is the achievement of the objective of the organization. And the other lens is the operational lens, which is kind of headed by the management of the organization, ensures that, the organization takes all the steps which the governance of the organization has defined for them. So from that lens, if we see, the internal controls is also an important responsibility of the governance of the organization. The governance plays a very, very important role in ensuring that internal controls are adequately placed within the organization. Now, following them, implementing them, again, is the responsibility that falls upon the management or the operational staff of the organization. So, we often say that the fish rots from the head. So, that is what we have to remember, that the tone is always set at the top. And when we are talking about non-profits, the head, or, who sits at the top is the board, is the governance of the organization. So from that lens, it is also a responsibility of the governance of the organization. Now, I'd like to understand from you, Sharad ji, that we all know that, the boards of non-profits usually sit in voluntary capacity. They work in the capacity of, voluntary capacity. So how in that case are they responsible for ensuring that internal controls should be there in an organization? They don't even get a salary. They hardly come to the organization. The board primarily operates through meetings, and they hardly meet each other. So how the responsibility of ensuring controls falls within the ambit of governance?
Thank you, Bhanushree. Why we are now talking about, so we considered that internal controls are necessary. We have seen the spectrum of internal controls. Okay, we have seen the entire bandwidth of internal controls, and we have also understood that this is a matter of how our values, our vision for the organization. It's not something to do with spending money, but coming now to how do you ensure that there are proper internal controls and the internal controls are being practiced. So the first thing is, as far as the governance structure of an organization. So we normally have to understand that any organization, be it for profit or not for profit, has a governance structure and has a management structure. The management structure is day-to-day work, and the governance structure is essentially an oversight function, because that structure has a fiduciary responsibility with the organization. What is fiduciary? Fiduciary means that there is a trust that the organization has reposed in that governance structure, that at the end of the day, everything that is being done by management is something that is in line with rules and regulations. So then the answer is clear. The answer is that as far as internal controls are concerned, they have to be, approved. At times they may be designed, defined by governance, and they have to be approved by the governance structure for implementation. Revisions of the internal control procedures, which means revision of policies, procedures, revision of protocols, is something that is also the responsibility of the governance structure. Deviation from policies and procedures is something that can be done by management with suitable justification. So I think that should be very clear. Now, how does governance structure define design? They are not specialists, as Bhanushree says. Many of them are, and whether in pro bono or not pro bono, it doesn't matter. What is important is how much of a bandwidth in finance does everybody have in the governance structure? Not all, some of them. So it is so medium-sized organizations. It will be good to look at subcommittee of the board, okay, of the board. So the governance structure may look at subcommittees which are uh, where you can bring in subject matter specialists or subject matter people who can assist. Okay, so you can have a subcommittee of the board on finance audit and controls. So you can call it the FAC or the Finance Audit Control Committee. All right. And you may have some people from outside, may not be board members, and therefore your rules and regulations should permit those people to bring in the right perspective, the contemporary current practices, and uh, alert your governance structure as to what needs to be done. So that is one way in which medium and medium organizations can strengthen their governance structure in terms of finances. I'm not talking of other areas. What I have seen is that the governance structure is completely defunct. And sorry, I don't mean to say anything wrong to anybody, but I would like to call a spade in the sense that let's agree to things that has not happened in this sector, which is causing all this pain. So the governance structure has to be vibrant. Only then internal controls will be implemented. So it's not only just the approval, but also the review of internal controls that has to be done by governance structure. Now that's the responsibility of the governance structure. And unless you have people who can do this in the governance structure, it's not going to work. That's the point that I want to make. It's very, very important. And financial stability, sustainability of an organization is based on how the finances are reviewed by your governance structure. And all of them will not be, our fingers are not all equal. So we understand that. And therefore, those people who know finance are people who can be kind of, brought in, not at a very high cost, but they can be at time to time brought in to your governance structure to help you with the financial controls. Okay. So not only approval, but also review of implementation of financial controls is the governance structure. Now comes to the point where policies and procedures with kind of inputs, with relevance being the key factor. Relevance means the need has been considered, your current stage of evolution has been considered, your next 3 4 years journey estimation has been considered, and that relevance has been considered in terms of internal controls. Now that those internal controls have to be implemented by management, because basically decision making is what needs to be controlled. Okay, and those are internal controls in those various areas. So implementation of internal controls is the responsibility of management at each level, right up to the foot soldier that you have. So what is important for management? So the governance structure, I've said the bit in terms of the pitfalls that are there and what actions can be taken, and what without any major deployment of finances you can. As far as internal controls for management and for your staff is concerned, the biggest factor is creating awareness and training about internal controls. So wherever in those organizations where there is a kind of a mechanism for training on internal controls, on policies and procedures, that throws up not only the desire to implement internal controls, but also throws up barriers to internal controls that can be corrected by correcting policies and procedures. So that's the other point that I want to make. But and therefore the training of people on policies, procedures, or internal controls also ensures, kind of formally also ensures uniformity of implementation. So it ensures ownership. It ensures that people understand, people having difficulty. Internal controls is not something black and white. It's not like the constitution, which what change करने में बहुत problem आएगी. It's not like that. What is important is that those internal controls are relevant. The word relevance is important, and relevance is to your organization. So If there are challenges to implementation of internal controls, which we thought probably will be facilitating control, then those barriers have also to be removed. So that's how I would say. But I am sorry to say that the governance structure in small medium organizations is very indifferent or are not even knowledgeable about this, with the result that internal controls and best practices is something that just doesn't get there. At times, I have also seen that managements of these organizations keep the governing board slightly away from all this, because then it also brings about a report card of management in terms of anything not being done. So I think from the point of view of management or the operational side has to understand the need for governance. And this is where the management and governance conflict is there. But that conflict has to be resolved, because we need to get the best out of the governance structure to help our organization's sustainability. So I would say that, well, each of them has to perform, each of them has to repose trust, each of them has to kind of, report. But at the end of the day, whether controls are being followed or not is finally lands in the lap of the governance structure. And therefore, when I talked about risk management, I mean, I'm not something interested in just talking about risk management, is because that is a systematic way of, ensuring internal controls lapse. Not only in that those areas need internal controls. That is the reason why I'm talking of risk management. And risk management is squarely the responsibility of governance. So all put together, the implementation of internal controls, new risks that might require internal controls, are all responsibilities of the governance structure. But then there has to be a very good interface or connection between management, top management being people in charges, not only CEO. CEO might not understand everything related to finance, but the head of finance, the head of HR, the head of program have to feed into preparation of procedures and policies, because they know the ground reality. Okay, so that is how I would say internal controls have to be practiced, supervised, approved, reviewed, changed by various levels in the organizational hierarchy. Manushree.
Thank you, Sharad ji. And I think all of this is so fluid. Like you said, no, that it totally depends on the organizational size, structure, the life cycle stage that the organization is in. If it is a very small or newer organization, then the lines between governance and management might not be so distinct. It could be one and the same thing. But if it is a larger organization, then there could be various levels in between them also, like you talked about committees and other structures like that. So it's very fluid, but the idea over here to understand is the governance of the organization essentially has to keep an oversight and has to give the organization the culture, the kind of initiative, the kind of guidance to have those systems and policies that ensure that checks and balances are there. So, when we were talking about financial policies and processes in the second segment, so ensuring that the organization has those kind of policies, whether the policies are adequate to the organization's context, whether, like Sharad ji said, relevant, whether they are relevant or not. So that falls in the lap of governance. Ensuring that those policies are being implemented then falls in the lap of management. If we talk about the ideal kind of segregation, then ensuring that there are adequate checks and balances again is something that the governance would do. Ensuring that there are self-checking mechanisms, that there are mechanisms of review in between, those kind of the ensuring thing has to come from the governance. When we were talking about compliance, Sharad ji also mentioned compliance calendar. It is such a simple and important tool that the boards can make use of to keep a check on whether the organization is compliant with the relevant laws or not. Just an annual compliance calendar with maybe an exception report of what all was not being able, the organization was not being able to comply with. All of this creates a culture of self checking and accountability that the organizations really need. Then use of committees. I agree with you, Sharad ji, that the boards sometimes are not competent enough, or they do not have the bandwidth or the capacity to discuss very deeply in on financial matters, on matters of policies, on matters of financial policy. So they might take use of other structures like subcommittees, a finance committee for that matter, or an audit committee, wherein certain experts could also be called, and the committees would then discuss and then recommend to the board. So these kind of structures could also be made use of when we talk about the governance of the organization. And of course, setting the tone at the top, is something that comes from the board. So the board also, has to kind of demonstrate a behavior which is in compliance with the organization's overall vision, mission, values, culture. The tone has to be set at the top. Simple mechanisms, as simple policies as a conflict of interest policy or a risk management policy, would help in ensuring that the governance is also kind of following up with the compliance and the trends that is expected from that lens. From the management and operational staff lens, of course, ensuring an implementation of those controls fall at their level. So that is where the distinction lies. It's again very fluid. Sometimes the line is blurred, but then broadly, this is how the lines are segregated when it comes to the responsibility of internal controls. So I think with this, we should move on to the last segment, which is, taking some key takeaways with us before we, uh, uh, conclude the session. So Sharaji, anything you want to add to the third segment?
No, I think I'm good. I think you've summarized it perfectly. What I am only saying is that practically, for the kind of organizations that we are talking about, uh, this trust between governance and management, the point of trust is something. Sorry, my this thing is not working, camera. So the trust and between management and governance, the interface and amicable relation between the two. Although I know in smaller organizations there might be a problem in terms of the distinction between the two, because at least one of them, the chief functionary or the secretary, would also be part of management. That's all right. But then there are other people. How much of importance the chief functionary gives to churning of the board? I have 25 years old organization where the board members are the same. They have been reappointed. People who have conflict of interest at the board level because they might be related or whatever. The convenience of a board is not what is of importance, and that is why I want to say that they every structure, every internal control, every financial system will be meaningless unless the board is asking questions and making you accountable. Because board's responsibility is to make the management accountable. And that accountability will happen only if the management also provides the right information, helps the board. The board itself gets strengthened. The board itself is empowered, and the organization thinks that the board is, serving a purpose. So that is something which is the practical side which we need to consider in this lab, is that, and I've been insisting on this only, that something that we can do, something that can be a part of our culture, something that can be a part of our thought process. Nothing, no financial resources are required. I think our discussion today has had no discussion on financial resources. So it's only the existing resources whose mindset, the culture of the organization, the values that we cherish, and a bit of twist and turn in terms of the way that we work. I think that alone is the remedy for the kind of problem that we face in terms of organizations going through a tough time in terms of not only negotiating challenges but also overcoming them. So if my medicine will be that the governance and the board's and the management need to shoulder the responsibility of internal controls based on what they are supposed to do. But there has to be that trust, that confidence, that interface, which when I talk, I work for several small organizations and their boards as in an advisory, not in the board position, but as an I don't actually as an advisor. I find that the management is not actually giving the right kind of information because it appears that the board is going to take that management to task, which probably needs to be looked at. I cannot overemphasize this, but I find that that is the reason why the governance structure sometimes doesn't become effective. But that structure we have to make it effective. Internal controls review at the top level is the responsibility of governance.
Definitely, Sharadji. I think the ownership has to come from within, even though we know that the ideal responsibility of the board is this and the responsibility of the management is that, but then the ownership of it, the intent of improving, the intent of organizing oneself should come from, within, be it at the governance level or the management level. So I think that's a very important key takeaway that you gave. All right. Tenzin, you want to say something in between?
There was someone in the chat who has written, if the CEO is aware of his responsibility, he will first set up the internal audit process. I mean, there were a few comments that were actually written in the chats where people had raised several questions. Um, a lot regarding internal audits also, that how important it is. So really acknowledging everyone for posing in the questions, and even during the registrations, I think we got so many questions, and I'm just hoping that we were able to do justice to it. I mean, I won't say justice exactly, but Sharad sir and Bhanushree, it was really an amazing session, and hoping the audience's questions were addressed.
Yes. We are trying to address them in between the conversations, and it's a very important perspective that somebody has mentioned, that if one is aware of their responsibility, they will, set up the processes in place. So shall I quickly, because I think we only have 5 to 10 minutes, maybe I'll quickly just, cover the last segment where we said that, we promised that we're going to give you at least 4 or 5 key takeaways that you can take back. We talked about internal control so much, but then there needs to be some, actionable steps that you can take back to your organizations, no matter the size or nature. You could just start it right away within your own scope. So I think the very first thing that your organization can do is, again, segregation of duties. Just have a look at all the processes that are there. See how expenditures are being made. See how the procurement process is being done. See how payments are being done. Just try and identify that what is the process that is currently in place within your organization, and see it from the lens that whether there is adequate segregation of duties in between the roles, that no one person from start to end is taking the whole process forward. So one thing which you can do is identify and see if there is adequate segregation of duties. The second takeaway or step which you can take back to your organization, which I would like to give you, is that see that you have clear approval systems. Make sure that every financial activity, whether it's expenses, travel, procurement, vendor payments, anything, has a clear line of approval. And that approval isn't just verbal, it's a written, properly documented approval. Because a lot of times it's not just a matter of trust, that we don't trust each other enough to give approvals like this, but it's about documentation, it's about transparency, it's about being able to justify it that how the processes have been placed within your organization. So have clear approval systems, well documented written approvals for your transactions. Then I think we also wanted to touch upon it, and I think Sharad ji would also, like to add that use of simple tools. There are a lot of tools that are available these days to keep your processes on track. You could use Google Sheets, Gantt charts, variance analysis formats. All of them are so readily available, for all of you to make use of. Sharad ji, I know that this topic is really close to your heart. That how technology can be, used when we talk about internal control. So, very quick, any quick tips on use of technology or tools in
So
ensuring
I,
controls?
yeah, so basically, I want to again, before we talk of tools, I want to first state again whether the organization feels the need for tools. Okay, sometimes tools becomes a fashion. So I want first the organization to think that whether they need some kind of, the word dashboard and tools and analytics. I think first the organization has to ascertain whether what is their need in terms of these kind of tools. Now, simple tools like Google Sheets or variance reports or even Excel sheets can be prepared. Third thing that I would say is as far as finance is concerned, your tally is probably the make all, be all kind of accounting software. You can make the best use of that by understanding all the various modules and adding more values modules. I have seen a lot of people moving from Tally to other kind of standalone or whichever ERP system, and they are repenting because I want to also tell you, tools need not first to be introduced in your system. Second, people must embrace them, and third, only they'll get implemented. Many organizations I've seen, and the failure rate is very high. Where I've seen that people have introduced a particular system and gone back on the earlier system. So before you do that, look at whatever systems you have, and whatever systems you have, if they can be added, if some module can be added, that will be good. Now, fourth thing is, if you feel there is a need, I think in terms of travel, in terms of HR, in terms of attendance, in terms of, so many of these varied areas of your work, do have tailor-made softwares. Okay, I will not name any software. What I'm saying is today the HR software that might be available from already off the shelf, it will be cloud-based, it will be whatever, and there are so many of them and they are very, very cheap. So first, identify the need for tools. Second, see what you have and can additional modules be added. Third is look at, if that's not possible, then third, look at readily available off the shelf, not customized, but standard software, which can also be customized at very little cost, and then introduce that. But other than that, probably a lot of the Google Sheets and the Excel sheets will still be able to cover. And therefore, I say that before introducing tools and software or dashboards, it's important to understand our need for it, our readiness for it. Second is readiness, okay? Because who's going to run the tools? Your people are going to run the tools. Unless they are comfortable, unless they buy in. Today, if we just did a cutover from Tally to another ERP, and I'm finding it so difficult for that particular organization to convince their people on the ERP, because what is wrong with Tally? Tally can also be on cloud, Tally can also be online, Tally can also be real time. What is so special about an ERP? And do we require that kind of complexity? You see, accuracy is required, timeliness is required. Is complication or complexity required? Is the amount of resources required? Is something that you will have to see. So I will not give a ready answer on yes or no for tools and dashboards, but what I'll say is first see that you have exhausted all possible options of being able to be accurate, timely, reliable, all that. If you have exhausted, then look at tools which are more complex. Otherwise, there are a lot of tools which are available very, very cheap, and they are quite standard, which can serve your purpose. Bhanushree?
Yeah, thank you, Sharadji. So by tools, we are not necessarily pushing you towards, buying any expensive products or tools for your organization, but making use of simple available tools like Excel sheets, as simple as you could prepare your activity plan, your whole variance plan, your whole, budgets on Excel, but with just simple formulas. The idea is just to organize yourself in a manner that, you're able to keep control and checks and balances when necessary. So, thank you, Sharad ji, for introducing us to the commonly available tools like, Google Sheets and Excel sheets, variance trackers, something as simple as a Word document or, anything that can help you organize better is a tool for you. Uh, then I think since we were discussing key takeaways or key tips that you can take back, the fourth would be that, regularly your board and leadership, you should encourage your board or leadership to regularly review your key, documents within the organization. They should, review the existing policies, whether they are relevant or not, because for example there are still policies which were formed back in 1990s, and the organization has not changed those policies. Imagine if my organization has to call in quotations for every procurement beyond 2000 rupees. Is that even relevant for now? So review your existing policies and encourage your board and leadership to also do that. And it doesn't, the board doesn't have to be an expert in finance. You could also engage other experts, policy experts, finance experts, or anyone who has a good hold or knowledge on these aspects. Make use of that. Do not just shy away from making changes or reviewing your existing processes. And the last one would be, I think, introduce a simple compliance calendar. Have a calendar in front of your finance or admin team. Have a calendar for various procedural, for various reporting compliances. Place it in front of board at least on an annual basis. Whether it's donor reports or statutory filings, internal reviews, whatever it is, have a calendar defined for yourself so that you don't have to struggle with deadlines and timelines. So these were quick, actionable tips which you can already take in consideration. Otherwise, internal controls is a vast area of discussion, and there are a lot more layers, and we could definitely talk some other time on those aspects. But it was really amazing talking to you about this. And thank you, Sharad ji and Tenzin, for coordinating it so well. I will now hand it back to uh, Tenzin. If Sharad ji, you don't have anything to add.
No, I think I have only one sentence to make through this lab. This is a skills lab. The skills lab means that whatever you are gaining through the lab is something that you implement in your actual life. So my only one line, uh, you know, closing remark is understand what needs to be done and implement it in honesty, with accountability, with your people, with your existing people, and without having to bother whether there's a need for financial resources or not. Financial controls, internal controls, financial systems do not require uh, additional financial resources. It might sometimes require rationalization of your existing resources, but doesn't require too much. But it's the payoff or the benefit that you will get over a long period of time. You will not even realize how big you have become suddenly, because you actually put your head together to put down your head actually to be able to bring about that system, bring systems, bring controls, and actually following those controls. So that's about it that I can. I think if I'm sorry if I might have been slightly rough in terms of my assessment on what's going on and trying to cajole organizations to kind of think about it. That my reason was not to be critical, but my reason is to you know create that alert, that that alarm that I wanted to. because we are actually running out of time also for our session.
Thank you so much, Sharadji. Thank you so much, Bhanushree, for perfectly summarizing everything along with the key takeaways. It was really wonderful having you both on our session and amazing insights. To all the participants, for any doubts, any queries, any feedback, please reach out to us and please do visit our CFGG website as well. We'll be uploading the YouTube video over there, and then we'll also be uploading our FAQs on this Skill Lab sessions. And we have more in series every month, last week of Friday. Thank you so much.
Thank you.